the reason it's so volatile is because you're talking about crypto networks that are looking to disrupt trillion-dollar industries.
Welcome to the Freedom Point Real Estate Podcast, where we talk about creating more time freedom through passive real estate investing. Passive investing in real estate challenges conventional investment wisdom. We are passionate about learning and sharing resources with others who are ready to transform their investing mindset. Quick disclaimer as always, I am not a CPA, I am not an attorney or a financial advisor. This is not financial advice, not telling you or anyone else what to do. The views and opinions expressed in these podcasts are provided for education and informational purposes only and are not necessarily the views of my employer, ADP. I'm glad you're here. Now let's dig in. All right, welcome back, Freedom Point Podcast listeners. Thanks for jumping into another episode. And again, thank you so much for your commitment to this podcasting station, wherever you happen to podcast. Our listening viewership continues to go up week after week. We know we've got some binge listeners out there that have gone back into the archives and have listened to the last, I guess we're maybe sitting around 20, 29, 30, 31 podcast episodes at this point. So we want to continue to bring you good content and good guests. And today I have an excellent guest with me, ZACK Lindquist. ZACK, welcome to the show.
Thanks, Jeremy. Thanks for having me.
Absolutely. Thanks again for jumping in and joining us today. So ZACK is on with me today to talk about one topic that I get a lot of questions from investors on, and that is investing in cryptocurrencies. ZACK, a little bit of an update on himself. So he manages the operations and the portfolio allocations for a company by the name of Pure Crypto. Pure Crypto is the first crypto dedicated fund of funds to launch in the United States. So again, ZACK, thanks for coming to the show. What else would you like to tell our listening audience about yourself?
Yeah, I think maybe you kind of touched on it there, but we are a fund of hedge funds. So basically within our portfolio are different solely crypto dedicated hedge funds. And I know that's probably not a familiar structure for everybody in your audience, but yeah, I've been at it for 5, almost 6 years now and just love this market and love talking about it. So any chance I get, I'll take up on.
Sure. So what would you say to that junior investor out there that's really kind of maybe they're familiar with cryptocurrency, maybe they, bought into, Bitcoin or Ethereum because their buddy Brad told them to, what would you kind of tell that investor out there that really isn't quite familiar with the concept of cryptocurrency being either a way in which we use, it as a form of currency versus using it as an investment vehicle?
Yeah, that's a good question. The first thing I'd say is understand what you are buying and the risks you're taking. Bitcoin is a lot different than the rest of the market. And I think for most people, they don't really understand why it's priced a certain way or what it is that they're betting on when they buy Bitcoin or any cryptocurrency, for example. So, it takes a lot of time to understand the technology. That's one piece of it. But the investment thesis, I think, is really a learning curve and something that, we've been looking at for a few years now and have sort of perfected our thesis on this space. But for most investors, they heard about it because some friend or some family member told them to jump in and the price was going up. And buying something because the price went up is never really a great investing tool. So, I'd say understand what you're buying, do the research, and don't be willing to buy something unless you're willing to hold it through volatility.
And where would you recommend that people go to learn where the trusted advisors are in this space?
Yeah, that's a good question. There's a lot of really great podcasts out there. And there's a lot of Bitcoin and Bitcoin specific podcasts and crypto more generally. I can give you some links after the show to save on the episode here. But going and learning from people who have been working in this technology for many years, who understand the trade-offs that, what's the difference between Ethereum and all of the other projects out there that are just like it. You really have to spend a lot of time learning before I think you're ready to jump into the space.
Yeah, that makes sense. ZACK, would you be able to explain for the listening audience the concept of a crypto fund of funds and how it differs from traditional investment strategies?
Yeah. So a crypto fund operates like a traditional hedge fund. Basically, it's just an investment vehicle that is actively buying and selling assets. Our strategy, we are looking for crypto funds that are more in the buy and hold camp. We've sort of dabbled in different algorithmic trading strategy funds or multi-strat funds, and just haven't found that they perform well over a full market cycle. And so our fund consists of, at this moment in time, three underlying crypto hedge funds, and it's basically the same way an ETF can kind of wrap up equities into one neat product. We sort of wrap up a portfolio of hedge funds into one kind of buy-in price.
What advantages does it provide the investor to invest in cryptocurrency through a fund versus just going out and acquiring crypto themselves through a Coinbase or other platform?
Yeah, yeah. The first is expertise. You're paying fees for a professional to go into this market and choose the winners, and avoid the scams and just avoid the uninteresting projects in the space. So there's 6,000, I think, cryptocurrencies trading out there. There's a plethora of scams. There's a handful of interesting but never going to work type of projects. There's a whole lot of competition in this space. It's really like a startup, like a venture capital fund goes in and has to kind of parse out the diamonds from the rest of the market. And so our view is that the vast majority of this ecosystem will fail. The vast majority of these projects won't ever amount to much, but the ones that do, we think are going to change the world and disrupt major industries. And so you're paying for a manager to go in and find those winners. And then you're also paying for them to custody them in a responsible way. So I never want to advise anyone to hold coins on an exchange. You're taking counterparty risk there. I think that's evident to anyone who was paying attention to the market last year. Your coins are not your own if they're on an exchange. And so being able to take self-custody of these assets is an important piece to mitigating risk. And so with a good fund, you're going to have that sort of risk eliminated as well.
What does self-custody mean?
Yeah, so this is kind of it's unique to crypto, and not like stocks and bonds that you could buy on your brokerage account, but you can actually take the tokens that you buy and you can hold them in your own custodial wallet. So you're owning the private keys to those tokens, and they're unable to be moved out of your custody without those private keys. And so there's different ways to store those private keys and make sure that there's safeguards around them. But it's just a much better practice in the market today, especially with what happened with FTX last year.
You mentioned diversification a couple minutes ago. What criteria does Pure Crypto use to evaluate the underlying funds in your overall portfolio?
Yeah, that's a good question. We want to find managers that obviously fit this type of strategy we're looking for. We're not interested in swing trading and day trading these things. We don't think many people have an edge there. We want to find deep thinkers, hedge funds that think differently from each other. So the benefit of a fund of funds product is that you get to pick, 3, 4, 5 different teams to have in your portfolio. And so it's to your advantage to pick teams that think differently about the markets, because otherwise you get a lot of overlap and you lack diversification. So finding teams that think differently, that put out good research, obviously are trustworthy individuals, and we want to feel comfortable about the way that they custody the assets. We kind of have an internal policy that we're not going to allocate to any manager before we've sat down and had a meal with them. So we want to know them as individuals as well. And then we want, the best and the brightest, a long track record, ability to win deals in the private markets. That's a very competitive space in the crypto world. So those are sort of the things we look for.
So most that are listening to this podcast know that cryptocurrencies in general have been on quite the volatile ride. okay, over the course of the last 5 to 6 years. What would you say are the important factors in a fund of funds type model or the management of a fund of funds portfolio? What is kind of the main things that you guys are looking for to really minimize that downside, risk with the volatile space of cryptocurrencies?
That's a good question. A lot of funds will use various types of hedges, whether that's a derivatives contract or whether that's just using their cash position. We are not as interested in being sort of a multi-strat fund in that way. We think of crypto like venture capitalists. The venture capital world, it's pretty simple. You make 15 to 30 bets, and the vast majority of them, don't return you hardly anything or go to zero, and a handful of them do multiples for your allocation. We really do think the crypto market is a lot like that, and so when we invest or when our managers invest in a project that they feel has the ability to multiply the fund in a meaningful way, and if the potential is realized, but knowing that they're probably, the majority of them are not. So that's kind of how we think about the market, and so we're not as concerned with using various hedges. We tell our clients to position this accordingly, like you would a venture capital fund, and whether that's a 1% position or a 3% or 5% is obviously up to the individual investor. But the way we see it is this is going to be a volatile asset class. Its adoption is rising, similar to the internet in the early 2000s. We're excited about it. The reason it's so volatile is because you're talking about crypto networks that are looking to disrupt $1 trillion industries, right? And so you're having to price the probability of them doing that in real time. So that's another unique thing to crypto is you're getting real time price discovery. A typical startup will raise a seed round and then go dark and build, and then maybe raise a Series A and then a Series B. But there's no public market price on their company. They're sort of raising in these incremental rounds, and it's either an up round or a down round depending on how they're building their product. And then eventually they IPO, and the free market gets to decide what they're worth. Crypto's a little different because you get a seed round, and then you maybe get a Series A, and then within 18 months you're launching a token and it's trading on an exchange, and you're getting real time price discovery. So that's what makes it. It's imagine pricing in startups in real time. That's sort of what crypto is, and so that's a big reason for the volatility.
Yeah, it's an amazing space. What made you decide to get into this space in the first place, Zach?
Yeah, I kind of became fascinated with it in 2017. I was on a trading desk in Chicago, kind of helping the team do what's called exchange arbitrage. And the more I learned about Bitcoin and read the white papers and listened to podcasts and read books, I became fascinated with it on the technology side, not just trying to arbitrage the volatility, but I wanted to be long this industry for the next decade. And so I really kind of, I felt like it was intellectually stimulating. The technology is cutting edge. And then I think once I understood what crypto had to offer, I kind of looked back at the infrastructure that we're working with today, whether that's the payments infrastructure, whether that's how banks work or how exchanges work, and just the way that it's so archaic and expensive and slow. And I kind of tell people this, like, payments are just digital messages, right? Like every bank is just holding a digital ledger, just like a blockchain. And so when you make a payment, Chase Bank is just updating their ledger. And what's the price of sending a digital message, right? Like why should it take multiple days for it to settle? Why should it be 3% to get charged my credit card? Payments to me is a really easy industry that I feel like crypto is going to disrupt in a massive way. I think payments will be settled instantly at the speed of light for fractions of a penny on the dollar, because that's basically just how much it costs to update a digital ledger.
What would you say about this statement? Most people view cryptocurrency as being an investment versus a currency? And what does the industry need to do to change that perception?
Are you saying most people do or don't?
Most people do view cryptocurrency as an investment strategy versus what it actually is, and that is a form of currency.
Yeah, it's kind of both. So if you're talking about Bitcoin, you're talking more on the currency slash digital gold store of value front. But imagine an application in which the only way to pay for the services of that application is the native currency of that network, right? It's like paying for your flights and airline miles, right? You can think of airline miles as a sort of token. It's not an investment because they don't increase in value. But what if someone like American Airlines said, we are going to share 20% of our revenue with everyone who holds airline miles, and your proportion of the airline miles is that proportion of the revenue share. Now all of a sudden, the airline miles are an investment, right? They're not just a currency because they can accrue revenue. Now they become an investment. So you got to imagine a token is both. You pay for the services in that token, but they also, in a lot of ways, can accrue the value of that network. And so it stands to reason that on Ethereum, whatever application is using Ethereum, the Ethereum network, that value is going to eventually accrue to the Ethereum token because that's what is used to pay for the services. So I kind of see it as both, and I know that that's a real. I think that's a different concept than what most people have in their mind.
Yeah, I think it's accurate. I think it's, most people originally view it as more of an investment because they saw the price of Bitcoin go from 4,000 to 64,000, in an
Right.
18-month period, and saw the opportunity, to make some wealth relatively quickly. I do want to talk about a word that I've heard thrown around the street that I am going to be honest, I don't know a lot about, but I'm relatively confident that you do. And the word is halving. As I understand it, there is a halving process, whatever that means, that's going to be occurring within the next year. Can you speak to that?
So the halving typically refers to Bitcoin. Other networks will have their own halvings, but those are not really what the industry is talking about when they talk about the halving. The halving is the Bitcoin halving. So when Bitcoin was set up, the rules of the network dictated how many new Bitcoin would come into circulation each day. So if you think of a network of currencies like the U.S. dollar, we have no idea how many new dollars are going to come into circulation by the Fed every year. We have no idea. They just decide. Well, the interesting thing about Bitcoin is when it was incepted, it was algorithmically set up to issue a certain number of Bitcoin per day, mined by the miners. And I don't need to get too deep into the technical weeds there, but basically they're earning a fee for facilitating transactions on the network with newly issued Bitcoin. That number is fixed per day, and every 4 years, that number of daily issuance gets cut in half, and that's what's called the halving. So some people incorrectly would say the Bitcoin supply is getting cut in half. That's not accurate. The daily issuance of Bitcoin supply is getting cut in half and has so every 4 years since it was incepted. And so that's happening, I think, in April of next year. It's a big deal because what it ends up doing is, Bitcoin's only really priced based on supply and demand dynamics. And so if miners are receiving, half as much Bitcoin as they were the day before, that's that's sort of the daily supply hang. The miners being the majority of who are the daily sellers of Bitcoin, that's getting kind of cut in half. And so if you have constant demand that meets supply that's getting cut in half on a daily basis, you're gonna get sort of a scarcity event where Bitcoin starts to run up in price a little bit. At least this is what it has done historically. Bitcoin starts to kind of run up, and then it's this feedback loop where price going up kind of brings in new buyers who push the price up further, who bring in new buyers, and it's sort of this land grab. I guess 6 months post halving, you get sort of that classic Bitcoin top where things get overpriced pretty dramatically, and then the subsequent drop after that.
Sure. I suppose there's an expectation of the timing of when this halving process is going to occur, but basic supply chain economics, right, where you've got decreased in the amount of supply because the miners are paid half as much for the Bitcoin that they're mining, but if the
Yeah,
demand remains constant, the price is going to go up.
yeah, exactly. So each having Bitcoin's undergone a multiple of them. They're going to keep happening. It's not quite as consequential as it used to be. I don't remember what this halving is. I think it's going from like 12 to 6 Bitcoin per block, which happens every 12 or 10 to 12 minutes. So it's not as consequential as it was maybe, the two halvings prior to this, but it is still a big. Sometimes it can be just a self-fulfilling prophecy in the marketplace.
Sure. I know that you're not a financial advisor, but what would be your recommendation to investors in terms of the overall percentage of maybe their own portfolio being invested into cryptocurrency, whether that be in the currency itself or within the technology?
Yeah, that's a good question. What I tell investors that look into our fund is the wrong number is 0%. I think you have to respect the fact that this technology is sticking around. It's not dead, despite what the media has kind of parroted over and over again. And I don't really see there being that much else in terms of new, innovative, disruptive technology besides maybe AI. So whatever percentage of their portfolio is allocated to whatever is risk embracing, whether that's 1%, 2%, 5%, 10%, I think somewhere in that range makes sense depending on how old you are, how much risk tolerance you have. I personally, I'm younger, I'm on the more aggressive side, but we have clients within our family office that runs the fund, who have none, and they're 70, and they don't care if it goes up 20x, 30x, because they're just trying to, you know, keep their assets and retire. So it's a obviously a moving target, but I think somewhere between 1% and 10% is probably the right number.
Yeah, and it's a great point you bring up that our, appetite for higher risk versus lower risk definitely changes, as we get older. Our investor avatar in our 30s is not the same as our investor avatar when we're in our 70s.
Yeah,
Let me ask you a real simple question. Are you bullish on the future of cryptocurrency?
I'm absolutely bullish on it. Yeah, I I just think there's a lot of really exciting things happening. I try to ignore price. It becomes pretty hard to ignore when the price moves in massive ways, because I get my phone just starts blowing up with people asking me what's going on. So I try to ignore price and focus on adoption, focus on projects that are building in this space. One in particular I wanted to highlight that I think would sort of demonstrate the power that this technology has for your listeners. There's a network called the Helium Network, which is basically um, a telecom network built on the blockchain. So they just launched their 5G unlimited data plan in Miami for $5 a month, $5 a month for unlimited data. And most people will hear that and go, "How on earth can you well, how can there be a business that can make money $5 a month for a cellular data plan?" And the reason is, a company like Verizon or AT&T has to pay billions of dollars to set up telecom network satellites. They've got to pay leases for towers. They have to pay. I think they have 100,000 employees. Verizon does. Um, you have a massive workforce and you have a massive infrastructure spend. And what Helium is able to do is incentivize people using the blockchain infrastructure, incentivize people to run their own hotspots from their house. So now you just took care of the satellite infrastructure by having people run their own hotspots. And why would they do that? Because they're incentivized by being paid in Helium tokens for the work that they provide any users of the network. And it's a really powerful dynamic. and they were able to, get 1 million+ hotspots on the network in a year and a half. And so now at this point, they've rolled out their product in Miami. You can get, the same cellular service that you and I are used to for $5 a month, because they have only a small team of developers that are updating the software, and a business development team that's selling the product, and that's it.
So are you saying that those individual customers of Helium are in and of themselves miners?
The hotspot owners are. So you're a miner because you're getting issued tokens, or you're getting paid tokens in that sense. So different than how a Bitcoin miner operates. But yeah, you basically just sell people the hardware. They plug it into their wall near a window, and anyone who's in their little radius is able to use their hotspot to access the network. And so then the people using the network pay them in HNT tokens, which are, they have to buy off the open market with US dollars. And so you get the dynamic where the more people who use the network, the more HNT that's being purchased, and the greater the value of the token. So super exciting. I mean, that's a 90% uh, undercut of prices, with what you get in the telecom monopoly today. I think that's exciting. They're rolling it out in Miami, and hopefully many cities after that.
What would you recommend to the person that's been sitting on the sidelines since the kind of inception of Bitcoin, and the ability to purchase the actual coins themselves? What would you recommend for that investor in terms of kind of their first step to get started?
Email me, talk to me, or talk to a professional. Everyone's gonna have everyone's gonna know somebody who's crazy about crypto, and they might know a lot, they might know a little. Talk to somebody professional in the industry. I get on calls all the time, not even about the fund. I just get calls on people asking me to just explain Bitcoin like they're, 10. And I'm happy to just hop on a call and do that. And I know a lot of people in the industry are really focused on education, because if you just read headlines, you're gonna think this is some, volatile scam, money laundering scheme, and it's really not. And I definitely encourage anyone who's on the sidelines to ask questions, find someone who knows what they're talking about, and then decide for yourself if it's worth the risk.
Outside of your educating others on the benefits of investing in cryptocurrency, what is one or two other ways that you use your talents to give back?
And it's a lot of educational calls. We over the last few years, I think, on the family office level, which kind of sits above our fund, we've been just working with our investors and trying to find, other areas of their portfolio that might, whether it's crypto, whether it's not crypto. I'm always happy to talk with investors about, real estate deals we're involved in, or other things like private credit that are not volatile. In fact, they're quite, they're quite stable, and connect people with, professionals in that space. I'm definitely interested in just networking in the broader investment world, and trying to solve solutions for people who, if they want something that is embracing risk, great. Our fund is a perfect solution for you. If you need other diversified areas where, you're not embracing risk, I'm happy to point you in the right direction, and in that way as well.
What is one or two, either book or podcast, recommendation that you would make to my listening audience?
Yeah. One of the best books I've ever read is called Thinking in Bets by Annie Duke. It's not a terribly long book, but it completely, especially for people who are investing or in that investment management world, changing the way you think about investing is a huge, I think, piece to being successful. Thinking in terms of probabilities, and not diametric outcomes. Nothing's ever 100% one way or 0% another way. There's always a probability. It helps assess risk. It helps, just the way you see the world will change, I think, from reading that book. And I really enjoyed it.
It's a great book recommendation. It reminds me a little bit like, although probably not the same, but a book that I've read and recommended called The Psychology of Money by Morgan Housel. So good recommendation there. What's the next item on Zach's bucket list that he would like to check off, whether it be personal or business?
Man, what's the next? Professionally, with the fund, we'd like to hit the $100 million AUM mark. That's a bucket list item that we've been working towards. We're raising a new fund next year, working towards that goal. So that's been something I've been thinking about and circling for a few years now. Getting there slowly, and that's definitely our goal. So personally, man, I have to think about that for a second. I don't know. I love, my wife and I love to travel. I feel like I haven't seen a lot of the world. I don't know where to go, where to start. We went to Italy a few years ago, and that was awesome, but don't know where we'd go next, but kind of want to go out and adventure a little bit, especially, if I'm able to work remotely and sort of take work with me. I'd love to take advantage of that.
That's great. Well, we're going to be putting your contact information in the show notes. So those that are listening to this podcast, if you have any travel recommendations for Zach, it sounds like he's he'll be welcome to take some names of places to visit. So sure. Zach, I really appreciate you being, on the show today. What would be one or two ways that our listening audience can connect with you to learn more?
Yeah, I'm pretty active on LinkedIn, semi-active on LinkedIn. That's about the only social media that I partake in. I'm on Twitter as well, but I just read, so I don't ever tweet much. Otherwise, you can just email me. That's probably the best way to get in contact with me. Yeah.
Well, Zach, I really appreciate you being on the Freedom Point podcast today.
Thanks, Jeremy. Appreciate it.
Yeah, and for the listening audience, thank you again for joining another episode of the Freedom Point podcast. We look forward to having you on the next episode.
Thank you for hanging out with us today and for listening to the Freedom Point podcast, powered by Starting Point Capital. This show is for entertainment purposes only. Nothing said on this show should be considered financial advice. Before making any financial decision, please consult with a professional. This show is copyrighted by the Freedom Point podcast. Written permissions must be granted before syndication or rebroadcasting. If you're interested in connecting, you can find contact information at startingpointcapital.com.